Hey, this is Chris, and in this video I'm going to be sharing what I think will be the three big trends in the ETF world in Australia in 2022. Now, 2021 was the year in ETF world where we cracked through $100 billion in Australia, which was actually well ahead of when we expected that to happen. We thought it might happen somewhere in 2022. In fact, Magellan's conversion of some of its unlisted funds into the ETF structure accelerated this happening, and we hit 100 billion last year. In 2021, we also saw the launch of a whole suite of new ETFs, and particularly popular were thematic style ETFs. So ETFs that give specific exposure to a different segment of the market or the economy, hydrogen stocks, esports, some very niche ETFs came out last year. Now the trend I think that we'll see coming out of that in 2022 is a continual strength in the big broad index ETFs. So while a lot of these more niche ETFs get a lot of media and attention and press when they launch, there's some really interesting ones that are coming out, and certainly they're garnering the attention of a lot of traders and short-term, people that are watching markets. Really, the long-term money isn't going into these ETFs. It's going into the tried and tested vanilla index ETFs, and I believe they'll continue to grow faster than the rest of the market in 2022. VAS, the Vanguard Australian Index Fund, we've been banging the table on for many, many years, and it continues to grow and accumulate billions and billions of assets under management. I think it's the staple for Australian investors. Likewise, the Global 100 ETF that we recommend to clients, which have had clients in since 2014, gives wonderful exposure to the largest 100 companies in the world. In fact, it performs a whole lot better than most active global fund managers, including some of the more well-known ones in Australia, and you can compare its performance. I'll put the link below to a blog we've written comparing IOO to a lot of the other active funds. But it's these broad global and Australian ETFs that I think will continue to do well, as some of these niche ones do well or poorly, but eventually all that money will just get sucked up into the broader indices. A good example of a niche ETF that came out with a lot of fanfare recently but has disappointed is the crypto ETF. CRYP is the ASX code. Really interesting and innovative ETF investing into companies related to cryptocurrency and blockchain. Unfortunately, the timing of this ETF launch probably wasn't as the ETF issuer beta shares would have hoped for, just before a lot of these cryptocurrency companies really fell by a lot. And this ETF is now down close to 40% since it listed. That's not to say it won't be a great long-term investment. It absolutely could be. But the problem is if you're putting a lot of money into these high-octane ETFs, especially around when there's lots of noise, the experience of a lot of investors will not be a good one, and a lot of them will lose money and then end up taking money out and just going broad. So that's trend number one for this year. Trend number two, I think there'll be a continuation of the trend into sustainable or ESG ETFs. It's something that has been accelerating in Australia, and actually we're quite a way behind the rest of the world. Europe is really leading the rest of the globe in terms of the adoption of sustainable ETFs, but Australia isn't far behind, and the success of businesses like Australian Ethical and Future Super when it comes to superannuation show that this trend is really accelerating. We're seeing it outside of superannuation. A big trend has been the adoption of our sustainable ETF portfolios for non-super over the last year. And I think the awareness of this as an option is going to continue to drive interest, not only from the typical demographic of younger people that are more engaged and interested, but actually across the board. So continual growth in sustainable would be trend number two. And the third trend, which is an ETF trend we have started to see for a few years now, is the interest of active fund managers who have typically not had ETFs. They've been available on platforms or in the unlisted fund format. These funds migrating into the ETF structure, or sometimes some listed investment companies, LICs, that are trading at big discounts to their NTA, shifting into the ETF structure because it is a much better investment structure, even if you are an active fund. Look, I think that will continue to happen because distribution is really drying up for active fund managers on the traditional platforms because advisors are no longer selling these funds. their performance in many cases hasn't been too glamorous either, and so they're looking for ways to get in front of more retail investors. ETF seems like a pretty simple way to go. However, I do also think the longer term trend will be that a lot of these don't succeed even in an ETF format, because all it does is make the performance, or underperformance should I say, versus the index even more obvious and apparent to consumers, and so consumers won't have a lot of patience holding these active funds for a long time if they continue to underperform. So I think we'll see more of these active funds listed as ETFs, but I don't think too many will be successful. Mathematically, only 1 in 10 is going to outperform over the long run, and so probably that's what you'll expect to do well as well. And those are the 3 big trends I see emerging in ETF world in Australia in 2022.